Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is July 11, 2018, and I thought I would take a look at live cattle today, the ETF being cows, COW. We've got the short, intermediate, and long-term trends all pointing to the upside. We've got a mixed bag here with the technicals, and we've got the seasonal tendencies pointing to the upside. Now, I did a webinar earlier today when I was talking specifically about this type of a condition, where we have kind of a mixed technical and a seasonal bias to the upside. We also recently had a wave high, and we have some resistance that is ahead of us, and this all plays into what we're looking at right now, and that is and I'll just point this out, that nothing's going on with the pro alerts here on the daily bar basis, and when it comes to the cattle on the weekly bar basis, which is a new table that I've actually added to the website. There's nothing going on there. For those of you that are interested for the weekly patterns, you go to signals and then the weekly patterns, but nothing is showing up there right now. Let's take a look at the market as a whole, and I'll give you an idea, since I did a webinar earlier today talking about consolidation periods and what can take place. Well, here's kind of a fun thing that's taking place with cattle right now. The market was down on the day. It was able to close close to its 50-day moving average. We've got some resistance. So we come with this 50 right over here, and we go all the way across. It's basically touching the low of today. If we take a look at this fairly substantial support level, in this case resistance, because we're right on it or very close to it, and we go all the way across there, we're stuck between this level and this level, the low level being 103 and a third, and this level right here being 104 and a third, and here we are stuck right between. When we're between these different types of support and resistance levels, and we're stuck specifically between very strong ones, it's what we call an energy zone, not to confused with energy levels, but energy zone. Then you have a situation where the market is kind of pinballing between these different support resistance levels, and when you have that type of condition, big things can happen. Now our systems right now are actually flat the market, so they have no directional bias to the market. They're simply going to react to whatever the market does in the coming days, but there's a really good chance that something big is going to happen. It could be the downside, it could be the upside, but a lot of it is going to be predicated on the 50-day moving average and how we break above or below these particular levels. Now, the other thing I want to show to you and spend a little bit of time on is the seasonal bias to the market. Here is a 5-year seasonal tendency to the market, and you can see we're right at this base here where the market typically has a little bit of a rally to it. And what I wanted to show was that it's not just the fact that we're at that zone and that kind of V-ish bottom, and there's upside potential to the market, but we also have cattle here on the top 10 list for seasonal accuracy charts. It's not the highest, but it's certainly on the top 10 list. And if we take a look at this, we have on the 5 and the 10 year. Here's the 5 year, that kind of that base and with the bias to the upside, and we have something of a similar nature where there's going to be a bias to the upside on the 10-year charts as well. If we compare and look at the 5, the 10, the 15, and 20-year charts all together, and we come out with a projection, kind of a weighted projection to the market, the bias is actually fairly strong to the upside. From the low to the high, we're looking at a 5% move, so it's substantial enough to warrant some type of a movement to the market. Now, obviously, I said that we're in this period right now where we're finding a little bit of support at the 50-day moving average. Again, these are daily bars, and we're stuck between resistance and support to the market, kind of that energy zone. So there's a possibility that it could be biased to the upside. The systems are completely flat. They have no bias here whatsoever. But what they are poised and ready to do is take advantage of whatever this outcome is and be able to take advantage of that kind of a scenario. So I'm not necessarily saying you should go long or go short. In fact, in many cases, especially when you're in this type of a consolidation type period, you just simply want to wait for the market to play its hand so you can react to it. And from that standpoint, with that 5% move that is biased here over the coming weeks, that there's ample money to be made there should the market actually make a little bit of a pop to the upside, because that's obviously what it's looking for. But what I would do is I'd be watching cattle very, very carefully. Some of you might not necessarily look at that particular market, but it is something that you want to, because it has the opportunity to actually make some very good money. So watch over cattle, see what takes place here, and see us run out this energy zone, not level, but energy zone between these support and resistance level. It actually plays out and follows suit with the seasonal tendencies. The final thing I'll leave you with is that we just recently added this. If you come to membership and then down to video blog sign up, what this will do is just simply enter your name and address and, first and last name and email. What you can get from that is us just simply sending you our video blog on a regular basis, so you don't necessarily have to come to the website to see it. We'll just simply email it to you, and then from that standpoint, you can sort of keep up to date with what we're viewing with all of our technical analyses and all of our systems. What's taking place with all these different types of markets. So I would certainly encourage you to sign up for this. We'll send it out an early evening as far as that. Just come to membership, video blog sign up, and if you're interested, we'll certainly send off the video blog to you on a regular basis. So with that, I thank you, and we will take a look at another market here soon enough.